Hey there and welcome. So if you're an SME preparer and you're trying to get your head around the new IFRS S1 sustainability standards, you've landed in the perfect spot. We're going to tackle a really specific and super important question today. What on earth do you do when you've got a major sustainability risk, but there's no specific IFRS standard telling you how to report on it?
All right, let's jump right into a scenario that I bet a lot of you are going to run into. You've done the work, you've identified a really material risk, say something to do with water or biodiversity, or maybe your supply chain. But then you go looking for the IFRS standard that covers it, and crickets. There isn't one. Now don't panic, this is not a dead end. IFRS S1 actually has a plan for this, a really clear, structured path for you to follow. So here's what we're going to cover in this explainer. We'll start by talking about how to navigate that guidance gap. Then, we'll get into using specific thematic guidance, like from the CDSB. After that, we'll look at leveraging broader frameworks. Think GRI and ESRS. We'll also cover the absolutely critical investor-focused filter. And to wrap it all up, we'll walk through a real-world example to see how it all works in practice. All right, first up, navigating the guidance gap. What do you do when there's no specific standard? Well, the good news is IFRS S1 doesn't just leave you hanging. It actually gives you a clear hierarchy of sources you should look at to figure out what you need to disclose. Okay, so the standard says you have to use your judgment. But, and this is a big but, that doesn't mean you can just, wing it or pick whatever feels right. It's not a free-for-all. It's about following a specific, prescribed process. A step-by-step path to find information that's actually useful to investors and properly explains the risk. Now, you've really got to pay attention to the wording here because this is the absolute core of the guidance. Step 1 uses the word shall. That means you must, it's not optional, you must refer to the SASB standards and think about whether their topics and metrics fit your situation. Then, for steps 2 and 3, the word changes to may. You may consider CDSB guidance, and you may also look at GRI or ESRS. This shall, then may structure is basically your roadmap. Okay, so let's dig into that first may consider source, thematic guidance. Specifically, we're talking about the CDSB, which stands for the Climate Disclosure Standards Board. So IFRS S1 actually calls out the CDSB framework by name, which is a pretty big hint that it's a good place to look. And the reason is simple. It gives you really detailed, super focused guidance on specific environmental topics, especially things like water and biodiversity. Think of it as a specialized tool that helps you zero in on the exact information investors are looking for. And that's the key takeaway here, how targeted this guidance is. IFRS S1 specifically points you to it for water and biodiversity. So, for example, it can help you identify a physical risk, like, say, poor soil quality hurting your supply chain. But it can also help you spot opportunities, right? Like figuring out the better water efficiency could actually cut your costs and make your business stronger. All right, moving on. After you've considered that targeted CDSB guidance, IFRS S1 says you can also look at broader frameworks. And the two big ones it mentions by name are the GRI, that's the Global Reporting Initiative, and the ESRS, which are the European Sustainability Reporting Standards. Now, both of these are, well, huge. They're super comprehensive and have been around for a while. You can think of it like this. GRI is all about a company's impact on the world, the economy, the environment, people. It's for a really wide audience. And ESRSS, which is the backbone of the new EU rules, is also incredibly broad. They can both be fantastic sources for ideas on topics and metrics you might want to include. But, and please listen closely here, because this is probably the most important part. You can't just copy-paste stuff from GRI or ESRS into your IFRS report. Nope. There is a critical, non-negotiable condition that comes with using them. And that brings us to what I call the investor-focused filter. This is the absolute gatekeeper. Every single piece of information you even think about pulling from these other frameworks has to pass through this filter first. The standard itself gives us our North Star right here. It says an entity shall not obscure material information. Let's break that down. The whole point of IFRS S1 is to give investors information they can actually use to make decisions. So any extra stuff you pull in from GRI or ESRS has to help with that goal. It can't just be noise that buries the important stuff. So I want you to use this simple two-part test. For any piece of info, ask yourself, 1, does this actually help my investors understand a risk or opportunity that could affect our company's future? And 2, does adding this information conflict with, or worse, just hide or confuse the main stuff that IFRS requires? The answer to the first question has to be a clear yes, and the answer to the second has to be a definite no. No exceptions. Okay, enough with the theory, right? Let's put this into practice. We're going to walk through a quick case study to see how this all actually works in the real world, which is where it really matters. All right, so let's picture a beverage SME. Obviously, water is their lifeblood. And let's say they're based in an area where water is getting more and more scarce. For them, this isn't just some abstract issue. It's their number one sustainability risk. So they go to look for an IFRS standard on water. And nothing. It's the classic guidance gap we've been talking about. So what's their next move? Simple. They follow the hierarchy. They've already considered SASB, so now they move to that may consider step and pull up the CDSB guidance for water. And using that, they start to identify some really specific, concrete things to disclose. Things like the risks their water consumption creates for the local community, some hard numbers on how much water they're taking from a water-stressed area, and what their actual strategy is for managing all this. See? We're talking about real, tangible information here, not just vague promises. And this is the magic part. The disclosure they create isn't just an environmental report. It connects the dots for an investor. It clearly explains how this water scarcity issue could hit them in the wallet through things like new government limits, higher water taxes, or even, worst-case scenario, having to shut down production. It's all about tying that risk directly to future cash flows. And what about our investor-focused filter? Well, this disclosure passes with flying colors. It doesn't hide a thing. In fact, it does the exact opposite. It shines a spotlight on a massive risk that could seriously impact the company's bottom line. So by following the process, the hierarchy and the filter, this SME created a report that's not only compliant, but is actually useful for anyone trying to make an investment decision. So that's the question I want to leave you with. When you're building your own reports, always ask yourself, is this disclosure truly for my investors, or is it just getting in the way and obscuring what's actually material? Being honest with yourself about that question, that's the real key to getting reporting right under IFRS S1. Thanks so much for joining me for this explainer.